Welcome to Wall Street Confidential on the Street.com TV. I'm Farnoosh Torabi. Hi, Jim Cramer. How are you? We want to talk about Apple right now. The company comes out with their earnings on Wednesday afternoon. And today, Piper Jaffray ups Apple's price target to $205 a share. What's your take on Apple? What can we expect on Wednesday?
First of all, there's been comments in Stock Picker that I've been ducking Apple, which I really disagree. I've not ducked it in Mad Money. I've not ducked it in Stock Picker. Here's the deal. I have continually said that Apple's one of those stocks that you must trade around on every data point. What I said is as we got closer to the iPhone launch, you should sell it. There'll be people who are pressuring it down because they'll be able to create some disappointment, then you buy it back. I feel the same way about the earnings. We have now had this first-class ramp into earnings. I don't like ramps into earnings. The reason why you got Intuitive Surgical to have a big run or Research in Motion to have a big run after earnings is because no one was expecting anything. Everyone's expecting something good. I feel this is going to happen. I think that the call is not going to be about the iPhone. It's going to be about the earnings. I don't see a lot of special in the earnings. So I think it's entirely possible that the earnings just, and then the next day you get hit and then you can pull the trigger. Piper Jaffray should have, if I were running that research department, I would have held that piece till after the earnings. We do not want to have a situation where people who have owned the stock from when I first recommended, which was 95, who have not taken anything off. That's just foolhardy. At a certain point, discipline trumps conviction. We have had such a massive run that I don't care if they say, listen, we just did twice what people think. There is almost no level of earnings that I think can please the street after this run to the 140s.
So what do you do after the earnings come out on Wednesday?
Then you can buy it.
Then you can buy it.
One of the things that the home gamers have to recognize, and I always see such reluctance to this, is it's okay to sell half your position. What a godsend that the stock then runs to the Piper Jaffray $200 target. How fabulous is that? You got a good profit and you have more, you still have tons of skin in the game. But people don't want to do that. First of all, they view it as binary. Cramer's saying sell all of Apple. Completely untrue. Then they view it as like, well, I can't. I have 100 shares. I can't sell 50 because the commissions will eat me up. Has anyone looked at the level of commissions, what they cost? So, or the tax man. I got to pay the taxes. Capital gains are pretty low. So what I say to people who are unwilling to take something off is, look, if you better not mind a sell back to 135. You better be able to deal with that. Because I don't want to have you in my face in Stock Picker or anyone else telling me, thanks a lot. Why didn't you tell me to sell some Apple? Because I am being abject and adamant. Sell some Apple.
All right. There you have it. Thanks a lot, Jim Cramer. Wall Street Confidential. Don't go away.